Hey everyone, welcome back to Corporate Decoder, the place where we unpack the money secrets behind the headlines. And today we are diving into Park Dental Partners Incorporated's latest filing, a company that is making some big moves in the public market. So what is the big news? Well, Park Dental Partners Incorporated, or Park as you might see its stock ticker, has just completed its initial public offering, or IPO. This means they've officially gone from a private company to a publicly traded one, and we're going to break down what that really means for them and what the numbers are telling us. Think of an IPO as a company selling pieces of itself, called stock, to the public for the very first time. This usually happens to raise a lot of money to grow the business. Park Dental Partners Incorporated is offering its common stock, which is basically a basic ownership share in the company. The report we're looking at is an 8K filing, which is used by public companies to announce major events that shareholders should know about. This particular report centers around their IPO closing on December 4th, 2025, after pricing on December 2nd. This is a standard legal disclosure. It just confirms that they are following the rules for reporting these big events to the Securities and Exchange Commission, or SEC. Now, an interesting detail here is that Park Dental Partners Incorporated is choosing to be known as an emerging growth company. This gives them some flexibility with reporting rules, as they are still relatively new to the public market, but they are also electing to not use the extended transition period for new or revised financial accounting standards, which means they're going to follow the latest accounting rules right away. This shows a commitment to transparency, which is good for investors. This section details the big deal, the IPO itself. The company announced it was selling its common stock at $13 per S-share. This was a big deal, and the IPO officially closed on December 4th, 2025, meaning the company received the money from selling those shares. The company partnered with Northland Securities Incorporated as the main underwriter, which is essentially the investment bank that helps sell the shares to investors. They agreed to sell 1535000 shares of common stock. Here is a little extra perk thrown in for the underwriters. The company also agreed to give them a warrant. A warrant is like an option, giving the underwriters the right to buy more shares at a set price in the future. This is pretty common in IPOs and shows the underwriters' confidence in the company's future growth. They also have a special agreement detailing how these warrants will work. These warrants can be exercised for shares of common stock. Importantly, due to financial industry rules, the underwriters cannot sell these warrants or the shares they represent for a period of 180 days after the IPO closes. This is designed to prevent immediate price manipulation right after the company starts trading. This is a standard lockup provision. It means that for 180 days, company insiders like the founders and early investors, and also the underwriters, are restricted from selling a lot of their shares. This is to help stabilize the stock price after the IPO and prevent a flood of shares hitting the market too soon, which could drive down the price. This is where they announce related news. They issued press releases about both the pricing of the IPO and its closing. These are just official announcements to let everyone know the key milestones have been hit. This refers to the actual underwriting agreement, the main contract that spells out all the details of the IPO, the responsibilities of the company and the underwriters, and the terms of the deal. This is the form of representative's warrant, which is the template for the warrants we just discussed. This is the press release announcing the pricing of the IPO. And this is the press release announcing the successful closing of the IPO. This is a technical detail for electronic filing. It basically means the filing is designed to be read by computers as well as humans, making it easier for financial data systems to process. This is the signature section. Peter G. Swenson, the Chief Executive Officer, has officially signed off on this report, confirming that to the best of his knowledge, the information provided is accurate and complete. Now, let's look at the bigger picture here. Park Dental Partners Incorporated is now publicly traded. This gives them access to a much larger pool of capital to fuel their growth strategies. The fact that they priced the IPO at $13 per S-share and that it was fully subscribed, meaning all the shares were sold, suggests there was strong investor demand. This is a positive sign, but it is also important to remember that the stock price can fluctuate significantly after an IPO. The lockup agreements and the restrictions on the underwriters' warrants help create a more stable environment immediately following the IPO. However, the real test for Park Dental Partners Incorporated will be its performance moving forward. Can they continue to grow their business, generate profits, and satisfy the expectations of their new public shareholders? The underlying business, dental services, is generally stable, but competition and operational efficiency will be key. Looking at this filing, it is less about the deep financial tables right now and more about the momentous occasion of going public. The structure of the deal, including the warrants and the lockup periods, is pretty standard for an IPO. It signals that the company is being guided by experienced hands who understand how to navigate these early public market stages. My take on this is cautiously optimistic. Going public is a huge step and the initial demand seems strong. The company is structured to allow for growth, and the decision to follow new accounting standards immediately shows a mature approach. However, the dental industry can be competitive, and managing operational costs while expanding will be critical. Investors will be watching very closely to see if Park Dental Partners Incorporated can deliver on the promise that led to such a successful IPO. The real financial story will unfold in their future quarterly reports. Alright, that is our breakdown of Park Dental Partners Incorporated's IPO filing. What is your take on companies going public? Do you think it is a good move for them? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.